Welcome to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, New York City, we have Mike Alford. He's the co-founder and CEO of Digital Assets Data, and we're going to take a look at Bitcoin and how it correlates to other traditional assets. Mike, it's great to have you with us at Market Site, and that seems to be a big topic of conversation, particularly with the activity that we saw in August and September. So let's pull up our chart. We're going to spend some time on this and look at the correlations between the different asset classes.
Yeah, so there's a lot going on here, right? And I think one of the things that traditional markets players bring to the space is the idea that you can use correlations to understand how these assets should behave going forward. Unfortunately, the story in crypto so far is that these correlations tend to come into play for a period of time and then go away, right? So it's hard to tell sometimes whether the price is following the narrative or the narrative is following the price. For example, in December of last year, you actually saw Bitcoin fall in advance of the S&P 500's last leg down, whereas more recently, it appeared to be a more stable store of value over the last few months, and there were instances where the S&P actually fell and Bitcoin stayed steady or even went up. And so as you look at this chart, I mean, you see correlations over time with gold, you see correlations over time with sovereign bonds. Again, at a high level though, it's very ephemeral, right? So far, I don't think you can really say for certain what's going to happen in the future with Bitcoin. Based on correlations with traditional assets.
Could it be it's a newer asset class? There really isn't enough data to make that determination. Yes, it's been around for over 10 years, but it really hasn't been in the mainstream where we can have these conversations until like 2017. It's just a young asset class.
Right, that's 100% it. I think the market structure is new. There were literally 2 or 3 new exchanges that came online just in the last few weeks with Binance US and Bakkt. Right, and so the market structure is literally wavy. It's moving under our feet as we move along. The other thing to keep in mind is that equities and bonds have very well understood foundational, fundamental elements of value that are sort of widely shared in the market. Bitcoin doesn't really have that, right? There's some people who say it's a store of value. There's some people who say it should be a payment mechanism, right? And so in any sort of vacuum where there's no fundamental frameworks that are widely agreed on, people resort to the narrative. All that said, though, I think there is one fundamental valuation framework that really makes sense for Bitcoin, and that is the network value, right? So if you think about the telephone, imagine the first telephone on the planet is created, and then you create the second telephone. How valuable is that telephone? Not that valuable, right? But once you have thousands or hundreds of thousands of telephone users, it becomes much more valuable. Bitcoin is almost exactly the same, except Bitcoin has a native monetization mechanism that the telephone didn't have, right? And so I think if you think about Bitcoin as a network value asset, right, you can see that the fundamental thing you want to track is how many people are using Bitcoin every day, every week, every month. What's the transaction volume? How much are the miners providing computing power to the network to keep it running? That's how you're going to figure out where Bitcoin's going next. You're not going to figure that out by looking at the equity market or the VIX.
What do you think about the recent action in August and September? We had that pocket of volatility in August. We saw Bitcoin rise, so it got that safe haven moniker attached to it. Very different story in September, and that's a question we've been asking. Is it a safe haven asset? Is it a risk asset? Is it neither? And is it being analyzed the wrong way? And you just answered that before.
Yeah, I think it's being analyzed the wrong way in the sense that like the range of outcomes here are so wide, right? So if Bitcoin becomes a global store of value over the next 10 years, the upside return could be something like 50, 100x or more, right? But there are also people arguing like Peter Schiff that it's going to go to 0, right? And so because the range of outcomes are so broad here, the volatility should be expected, right? Whereas with an equity, like earnings go up or down a little bit, the stock goes up or down 5 or 10%. We generally know what the value of Starbucks is, right? If we use the product, Bitcoin is just it's an open question.
Would you say it's a technical trade then?
I would say that it could be if you're a technical trader.
Because the way it's been trading, it keeps breaking below very distinct levels of support.
Right.
So
I think a lot of that is that there's a lot of high frequency market makers that are active in this space, and in any given day that could be a huge percentage of the volume. So as these technical triggers happen, you see large drops and large spikes. In the long run, as Warren Buffett would say with high frequency market makers in the traditional assets, it's not going to matter to those of us who are holding these assets for fundamental reasons.
All right, Mike, great conversation. Thanks so much for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.